Is the age-old belief that capital cities outperform regions still true, or has the tide turned? I'm Tim Graham, and the Property Playbook starts now. In the past, investors chased capital growth in the big cities, but that's changed. The exodus to affordable lifestyle trend has seen more buyers turning to regional areas for lower prices, higher yields, and stronger recent capital growth. Recent analysis shows that Queensland and regional New South Wales are leading the way for investors. To explore this shift, I'm joined by investment advisor Julian Fadini, founder of Property 360. Julian, thanks for joining me.
Thank you, Tim. It's great to be here.
That's the way. Why don't we start? Tell us a bit about your business.
Yeah, so Property 360 is a buyer's agency and property investment advisory business.
Yeah.
We specialise in working with referral networks. So the way to work with us is via financial planner, accountant, or mortgage broker.
Okay. Yeah.
And yeah, we've been around now for quite a while. We've got professional athletes as clients and mum and dad investors.
Yeah.
Rent investors now is a big part of what we do.
Yes.
And yeah, we've been asked to have a chat today about our thoughts on the market and capital cities versus regionals, and so that's why I'm here today.
Very good. Well, tell us what you think. Where are you seeing the value?
Yeah, look, so we for a long time we've seen a lot of value north of Sydney, so moving through the northern rivers, so either side of Byron Bay, all the way up to Cairns for the people with a lower budget. What our trademark is, I guess, and what we focus on is locations with limited land supply. Yeah. So when you break that into a contextual size of what that means is that anywhere that there's a limited amount of mass developable land, also in locations that don't allow for super high density of apartments.
Yeah. Okay.
So lifestyle locations, but lifestyle alone doesn't carry the day, as we know, for property investment.
Yeah.
So it needs to be lifestyle, infrastructure, and employment.
Yep.
And we can get those in spades moving up the north coast of Sydney all the way through up to Cairns.
Right, okay. So tell me, have you always sort of looked at regional markets, or has there been a change in your career going from capital city to regional?
Look, I wouldn't shoehorn us into regional markets. We definitely operate in capital cities as well.
Yeah.
What we're finding, if you want a solid investment that's bought at an entry-level price right to the sort of middle of the range, the regionals really do provide a lot of things in spades. For example, rental yields tend to be a lot higher.
In a high interest rate environment, it's very important.
High interest rate environment, yeah, clients definitely have a higher cost of living these days. So anything to help them build their portfolio through this in the way of high yields. But high yields aren't the only thing. Limited land supply, population growth, and diverse things that change the economy moving into the future. So not sort of sugar hits, more systemic changes to the location.
Yeah, long-term growth.
Long-term growth has to be long-term growth. Property is a long-term game.
That's it.
So you need to look at the long-term growth, and when you sort of you build out from that, and you consider these areas. On the long term, there's just not the land supply to build into.
Yeah, okay, that makes sense.
So the capital cities, Adelaide, Perth, and Melbourne. Perhaps some of the people watching don't know this, but they're some of the flattest cities in the country. And flat cities are a land subdivider's dream.
That's very true.
So the population growth will be there in those cities, but there's lots of land for them to move into over the years as well.
Not to mention cost to construct as well in the places that are a bit more undulating. So
correct. So if you take that long-term approach, you can see that those cities have a lot to grow into.
Yeah.
And that doesn't mean that you can't make money in those cities. It just means we're dialing down and doubling down as well onto those locations with less land. And like if you look at the Sunshine Coast, which is one of Terry's favourites and where he lives, if you look at the corridor from Maroochydore to Noosa, there's no mass land available in that area. The density of apartments in that area won't be increased. We've got some real challenges around them being a regional sort of framework for infrastructure, so it simply can't handle higher density and more population. And as you can see from the stats, if you look around, Noosa, for example, close to 200% growth in 10 years.
Yeah, wow.
So, we've been in that area since about 2015, but it's not just the growth in capital values in the Sunshine Coast. Rental yields have pretty much matched those percentages in growth.
Yeah.
And we've got a lot of clients that have made a lot of money since 2015 in that Sunshine Coast market.
Yeah.
So look, we love the Sunny Coast. It's a great spot. And then the focus now is sort of north of the Sunny Coast, and then also still very active in the corridors around the northern New South Wales. Northern New South Wales for us, very hard to get into. Not a great deal of land, and that suits us perfectly, and that suits our investors that have a little bit more money to invest.
I'm curious to know, you're talking about budget there, what would you say the average budget would be for your clients? Does it vary?
I think most of our clients come through the doors around about that $800,000, give or take. We have about 20% of our clients, probably $1 million plus. And we have seen the lower end of the market becoming...
With borrowing capacity is much tougher.
Yeah, so that's been big for us. So rent investors, just our normal investors also have been dialed down somewhat to those lower entry points. But yeah, the 500s 18 months ago are now 700 plus. And we all know the story moving forward. Yeah,
I tend to agree. 800 seems to be about the sweet spot right now, though, doesn't it?
Absolutely.
Good balance of growth and yield.
Yeah, absolutely. Yeah, and look, personally for us, we like to see our clients buy properties that don't have any compromise. So, like our business model is very much, a 4-bedroom house on a good sized block, something that will appeal to owner occupiers into the future. We only deal with investors, we don't deal with owner occupiers. But that, from our point of view, that's who's going to pay the emotional price for your property in the future if you sell.
When you're looking, your exit strategy is very important. You want people that are going to pay a premium for that product off you later.
100%. So we steer away from like the investor type products that are built for investors. We just don't see the logic in that, and other people may, but yeah, it's not our business model.
I like it. What about apartments? Do you have apartments as part of the mix?
Yes, sure. So we very rarely look at apartments, but we have, and we still do. There is a big part of the market moving into the future, which are the downsizers. So the types of apartments that we like are low rise, low density apartments. So if they have a lift, it's a very small, sort of 4 stories. Proximity to amenities like golf courses, beach, those lifestyle types of things. So they can't be investor style units that are just trying to pack 3 bedrooms, under 100 square meters. So the apartments that we
You're looking for a unique quality.
Yeah, exactly right. Again, keeping in mind what you mentioned before is that the exit strategy, keeping it in mind, having an owner occupier being able to move into that.
I really like that. It sounds like you guys really are reverse engineering the exit strategy from the beginning.
Absolutely. Reverse engineer is a great way to put it. Yeah, we want the outcome at the forefront of what we do.
That's it. And tell me about, customers. You said there's some that are over that $1 million mark. Where do you look for clients that have got a budget that high? Yeah,
sure. So over the $1 million at the moment, we do move slightly into capital cities. However, if we're talking about regions, Northern New South Wales, that's our key focus at the moment for clients over $1 million. Also in that corridor in the Sunshine Coast from Noosa back down to Maroochydore. So you've got Coolum, Parisian Beach, those types of markets there, Parisian Springs even. In those
when
locations.
You think of, your capital cities like your Melbournes and Sydney, $1 million doesn't buy you much. What does $1 million buy you up there?
So it depends on how close you are to the water. If you're close to the water in those locations that I mentioned, you're probably looking at a 2 to 3 bedroom type of townhouse. If you're looking for a house, you probably need to come up a little bit more in those locations. As you move further away from the beach, $1.2 to $1.5 million will get you a 4 or 5 bedroom house. That will rent very closely to $1,200 to $1,500 per week.
Yeah, wow.
Yeah.
So,
and if you dial into...
It's still a very good yield for that budget, isn't it?
Yes, and if you dial into the stats and the figures that we get from writer research and hotspotting, you can see that those over 10 years, you're pretty much looking at double-digit growth for those locations.
Yeah, wow.
Yeah. So we don't know what's going on into the future. However, one thing's for sure, 10 years ago, there was less people living in the country than there is now. And so therefore, if the population continues to increase and we just don't have the land supply, well, more likely than not, we're going to see those
fundamentals are already there, but you go and buy good real estate,
already there.
Well.
Yeah.
Let's come back to Property 360 specifically now. Let's tell me, if someone was to come and work with you today, what's the general process you'd go through with a client?
Yeah, first thing that we do is, depends on the age of the client, but if the client's in their 40s, the first thing that we would say to them, 40s all the way to the 50s, if they don't have a financial planner, then we would definitely say, look, guys, we can help you build your portfolio, and there's things that we can do. However, we feel it might be a little bit reckless that you've popped your head up at this point in time to look into your future, but you haven't gone to see somebody who's a professional advisor to give you the full suite of advice. My background is financial planning, and I've been a mortgage broker at a point in time many years ago. But the financial planning piece for us is super important. It just helps people. Most people are buying for a reason, whether that be, to help into the future of some sort of thing, whether it's retirement or children's future, legacy, things like that. Either way, the professional advice piece really is just the way to make sure that the strategy works for them and no costly mistakes are being made. Property investments can be expensive to transact in and out of, so we want to make sure that they get the best advice up front.
Yeah, I agree with that.
Yeah.
All right, so finally, I suppose the $1 million question, if you're just starting out today, should I be looking for capital cities or regional markets? If I've got a $1 million budget, where would you suggest I buy and what sort of price point?
Oh, look, if you're starting out, so if you're looking for a region, look for something that has employment, education infrastructure, and just the fundamentals to make an area grow.
Very good. Well, Julian, people who want to reach out, what's the best way to get in contact with you?
www.prpty360. Just drop us a line there, or I'm very visible on socials, and you can drop me a message there.
Terrific. Good man.
Thank you.
Well, folks, that's the play for today. This program is brought to you by hotspotting.com.au. This is Ticker. We'll be right back.
You're watching Ticker. We'll have more in just a few minutes.